Next, we have Dr. Paul Clarke, CEO of CanCambria Energy Corp, CCEC on the Toronto Venture Exchange. CanCambria is looking to unlock the value of a multi-TCF natural gas play in Hungary, tight gas play, unconventional tight gas play in Hungary, which I think is extremely timely. North American natural gas and European natural gas pricing is very, very different. So Paul, I'm sure we'll talk about that. Obviously, very timely name to watch right now, but I won't steal any of your thunder. So Paul, why don't you take this away?
Well, pleasure to be here. My name's Paul Clarke, President, CEO of CanCambria, and I'm going to share with you our vision for natural gas development in Central Europe. And you would probably have to have been hidden away in a cave some part of the world not to see the issues unfolding in the Middle East and the direct implications impacts it has on the energy supply chain and also natural gas prices in Europe. Of course, we are massively exposed to natural gas prices, which have moved up significantly over the last month or so. Natural gas up significantly year to date over in Europe. So I'll draw your attention to one or two forward-looking statements as they relate to resource numbers, so on and so forth. So CanCambria, we are an exploration and production company founded in Vancouver. Our cornerstone asset, in fact, our entire asset base resides in Central Europe. We're in southern Hungary. I joined the company in 2022, and that's the same time we entered southern Hungary. We had a really a 5-year plan to consolidate our acreage position, take into account all the technical data, acquire new technical data to de-risk resource numbers. And as you can see, we've got over 1,000 square kilometers of land. We have in excess of half a TCF of risk recoverable gas. And that has a valuation here in a $10 gas environment of well over $1.5 billion US. So a very significant valuation. And importantly here, within that 5-year timeline, we hope to be drilling near the end of the year and have first production early 2027. So there aren't many places in Europe where you can do this. To be frank, it is very difficult to get a position. We were a little bit lucky and massively opportunistic to get a position in southern Hungary. And so we're ready and able to execute on that plan. A little bit about the corporate. We've been trading on the Venture Exchange in Toronto almost a year and a half, 70 million market cap, about 4 million cash on hand. As you can see, year to date, the stock's up around 50%. A lot of that driven by natural gas prices in Europe. Of course, we don't have any production, but it gives you a sense that we are near to bringing production on stream. So we're moving with the rest of the market in terms of the natural gas. Relatively clean share structure, good insider ownership. In terms of leadership, I don't want to spend too much time here. You will be able to go on our website, cancambria.com, and check out our bios. Importantly, in Europe, we have our COO, our MD, boots on the ground in Budapest. Very strong interaction with the regulatory ministry, etc. over there. Absolutely critical for credibility and to get these projects executed. My background, 25 years experience, petroleum geologist, having worked with a number of large independents. You can see the companies at the bottom of our slide here. We've worked for a range of majors, independents, etc. Probably the highlight for me is working with Pioneer Natural Resources and work their Eagle Ford and Permian Basin plays. These were very, very large, very scalable projects where we did the same model of organic growth, value creation within proven basins, leveraging technology. And that company was bought by Exxon here recently for in excess of 60 billion. So that's the model that we have. I strengthened the board through the end of the year with a contact of mine, a friend of mine, Jay Stratton, very, very experienced energy executive. He and I worked together at Ultra Petroleum. That is one of the largest natural gas fields in the state of Wyoming. And that was a really important addition when we get the project into execution phase, bringing down costs and improving efficiencies, so on and so forth. So I have a great leadership team. I have a wonderful board, as I said, positioned to execute on the project. Just a short word on natural gas in Europe. We entered Europe on the back of a major investment catalyst, Russia, Ukraine. That conflict has not been resolved, as you're well aware. And the prices, natural gas prices, have stayed in that $10-11 price range. Comparing that back to US, which is $3 per MMBTU, our project is economic down to around $4 gas. So we really don't want the prices that we're seeing, presently $17-18 gas, draws unnecessary attention to the energy sector, energy security, affordability, et cetera, et cetera. But we certainly like those $10 to $12 prices, and we see prices through the end of the year being in that $13, $14, $15 price point. Really a great time for us to go in and drill our first well and take advantage of some of those prices. Hungary is landlocked, doesn't have necessarily the exposure for LNG. Most of its gas is imported, a significant portion still coming from Russia. And there are some very significant European Union mandates through year-end 2027. So there is a huge need for domestic production in the region. So in reference to the two projects that we have, we've disclosed a lot of information on our deep tight gas project. You can see a whole series of key milestones here, from securing lands all the way through to drilling. And most of those milestones have been accomplished on our deep tight gas play. What we introduced here earlier this week, we put a news release out. We have this additional block of land, this large concession that we acquired. Now, we acquired it to consolidate the deep play. But the more we look in this shallow region, the more we like it. Presents a whole series of shallow oil and gas opportunities. And we're relatively early, but I wanted to at least introduce that on the call here today. We've secured the lands, completed our desktop studies, and I'll just give you a flavor of what that play looks like. But yeah, do not mistake us exploring this opportunity with, we're not neglecting this deep tight gas play. That is really still the cornerstone of everything we're doing near term. Activity in Hungary, a small cast of characters. MOL Group are a very large integrated E&P company, billion-dollar type company. They've made a number of fairly high-profile discoveries in the region of 1,000 barrels a day, in the neighborhood, one to the north, one off to the southwest of us. Aspect Energy, a Denver-based company, also discovered probably the best shallow oil field in the last 5 or 6 years. That field's producing around 6,000 barrels a day. So there is a precedent here for value creation in this shallow part of the succession. The white blocks that are shown on the map, these are the concessions that were awarded in 2025. Significant competition for the block that we have in Kiskunhalas. Very, very fortunate that we were able to consolidate that. We picked up that acreage for less than $10 an acre. So a very good investment for the company. So what's the concept that we're chasing here? Within the deep basin, we're drilling the source rock. If I draw your attention to the lower left, we're drilling the section where all the oil and gas was originally deposited. The concept for the shallow play is looking for areas where those hydrocarbons have migrated up and out of the basin. So there's a fairly diverse range of structures and traps, etc. The takeaway here is structurally high is better. So the area that we're playing that within our large exploration concession, shown in the gray area, is this northern area over the top of this Solvad-Ket trough. This area does not have any 3D seismic, which is really important, because that means all the opportunity is still in the subsurface. No one's come in, no one's taken all that low hanging fruit. So we have a significant block of land to the north. If we look in a little more detail, the map on the lower left is a structure map. The deeper areas are green area. The green areas are deeper. They coincide with the area that the source rock was being deposited and moving out of the basin. So areas in red, the structural highs adjacent are the areas that we're particularly interested in. And then you can see all the little dots on the map here within these blue polygons. They correspond to a number of oil and gas wells that have been drilled over time. And the relevance here is the upper right diagram, a creaming curve. This shows discovered oil and gas over time. So starting in the mid 60s, the advent of this gravity and magnetics technology, very rudimentary technology, that delivered around 100 million barrels of discovered oil and gas directly in this area. An additional technology of 2D seismic that added maybe another 75 million barrels, and that was really in the late 70s into the early 80s. And then things stopped. There was almost no activity in this region. That's not because there is no more oil and gas. It's simply because all the investment moved out of the country. Hungary became an independent nation, which was really, really good. But the investment then dried up, and all the oil and gas came in over the border, imported from Russia and other areas. So what we see here is an application of technologies that were presented in other areas. 3D seismic is a good example. We applied 3D seismic to this area. I would anticipate adding somewhere in the region of 25 million barrels potentially discoverable. These are internal numbers. These are not audited numbers at this stage, but that's the type of prize that we're looking to bring to the company, somewhere between 1.6 and 1.1 billion gross net type of numbers. So a significant prize to go chase. In addition to that, what we see is the application of drilling and completion technologies also. One example from the data set that we built, this is within that northern area. We've acquired around 500 line miles of 2D seismic. What that allows us to do is see some of the main structural features. Here you can see a fairly large basin bounding fault here. The seismic itself indicating in these brighter features the likelihood of oil and gas being present. So these are the things that we like to see. The seismic here is spaced in the order of 1 to 2 kilometers apart, nowhere near adequate enough to resolve the structures. But nevertheless, we do see between 10 and 15 of these very interesting structural features with hydrocarbon indicators. There are several wells in the region too, which demonstrate oil and gas. This section, it's around 1,000 meters or so drill depth. That's the section that the Aspect Energy Group were producing out of this younger, lower Pannonian section. It's around 60% shallower, 75% cheaper to drill than our deep play. And again, the advent of other technologies such as horizontal drilling could be quite meaningful for the area. Those legacy wells, when you look at the production, very, very variable. Some good wells, some bad wells, and I think that's a function of the basement style plays here, shown in the cartoon on the upper right, dominated by natural fractures, erosion, karst features, which are very heterogeneous. Drilling vertically in these plays is how the industry has addressed that, and there are no horizontal wells in this part of the world and this part of the basin. So we see the application of horizontal drilling as being yet another opportunity for the company. So that lends itself to, a number of things being maybe greater recoveries, but also fewer lower, more marginal wells as the wellbore connects up multiple fracture sets within the feature. So pulling everything together, we have a timeline here. We hope to shoot 3D in that shallow section in the concession towards the end of this year. Does not distract from our deep tight gas focus. We are, as you know, in the midst of a joint venture farm out process. We hope to update in Q2 and we hope to be drilling here through the turn of the year, showing here the first 2 wells. We're actually looking to submit a permit for our third location. We have a very exciting location that we can talk about here that we're looking to get approved in the not too distant future. What this shallow play, what it does for us in this higher oil price environment, it gives us some optionality. You know, we don't replace one with the other, but it gives us visibility into a project. Each of these shallow prospects are probably 2 to 5 wells, and there may be multiple of these prospects, but they drill quickly. They're relatively cheap to drill, and they add critical mass over time. So, in terms of balancing this portfolio, you know, we have our mega project, which is very, very valuable to the company, but then we add in some of the smaller scale optionality, and we work both. You know, we work both in parallel. So my final slide here, you know, I don't want to undersell this. You know, we are uniquely positioned. I do not know of any other company of our size, publicly traded, that has this sort of access to European gas. I don't know of any other company that has the technical wherewithal, the acreage position, etc. Plenty of companies that have access to European gas, but not the growth profile that we're anticipating here. You know, we are again 100% Hungary. You know, macro conditions really couldn't be better. The business model is tried and tested. New technologies in proven areas, and I think we're building out our portfolio to be more representative of the company that we want to become. We still have an aggressive growth model and near-term catalysts, and probably most importantly, a team that has done this before. So with that in mind, I will take any questions. Appreciate the time.
I also have to remember to unmute myself. Perfect, Paul. Great job. I do got some questions here from Bruce. Does Hungary have enough exploration and production infrastructure and service companies, drill, completion, equipment, et cetera, to be able to take on a project of this size? That's a great question, by the way, Bruce. Thank you.
Yeah, no, good question. There is a huge amount of legacy infrastructure in the region. Two main companies, MVM and MOL, they have a very good network. So no issues, no issues. Typically, if we were in North America, you would have plenty of companies building their facilities to you. You know, on our first 3 deep tie gas wells, we have a small pipeline in place. For the bigger, larger scale project, we will need to tie in some investment to tie into the regional trunk lines. Plenty of market domestically, so no issues there. There are refineries in the region. A pretty big refinery just south of Budapest. Railroad connections are good to move the liquids. So yeah, good infrastructure. The services, plenty of services. Schlumberger are very big in the region. Halliburton are also in the region. We have not contracted any drilling rigs yet, but there are a number of very experienced drilling rigs, MND from the Czech Republic. They are right over the border there. So that's likely that the rig that we'll bring in, they're drilling. I would say a modest pace in Hungary. There is one other deep project, Corvinus project, joint venture with Aspect and MVM. That project is cash flowing about $200,000 a day. They've drilled 7 wells in the past 2.5, 3 years. So plenty of infrastructure. Hopefully we get to be quite a lot busier than they currently see.
Perfect. Paul, that's all the time we have today. I did have more questions, but we'll just have to address that another time. But great job. Best of luck on this project. It's huge.
Thanks.
Timing is good, and looking forward to seeing how this joint venture process goes.
Thanks, Alan. Appreciate it.